Before we start, we must know 5 fundamental principles of professional ethics, professional conduct in accordance to MIA bylaws, which are: first, integrity; second, objectivity; third, professional competence and due care; fourth, confidentiality; and lastly, professional behavior. Integrity. Professional accountants must be honest and straightforward in performing their tasks. They must be aware and not associated in information that contain materially false or misleading statement or contain statement furnished recklessly. Objectivity. The principle of objectivity is to not compromise their professional or business judgment because of bias, conflict of interest, or undue influence of others. They shall not perform their professional service if bias, conflict of interest, or unduly influence affect their judgment. Professional competence and due care. Professional accountant must maintain professional knowledge and skill at required level and act diligently in accordance with applicable technical and professional standards in providing professional services. Confidentiality. A professional accountant shall not disclose any confidential information of their clients. They should also maintain confidentiality firstly, in every social environment and also being alert to the possibility of inadvertent disclosure. Next, maintaining confidentiality of information disclosed by a prospective client and employer. As for professional behavior, the professional accountant should avoid any action that may discredit their profession. Section 200. Threat and safeguard. Threat falls into one or more of the following categories. Firstly, self-interest. Second, self-review. Third, advocacy. Fourth, familiarity. And the last one is intimidation. Self-interest threat is the threat that other interests will appropriately influence the professional accountant or behavior. For example, a firm concerned on the possibility of losing an important client. Self-review threat is the threat that the professional accountant will not appropriately evaluate the result of a previous judgment. For example, a firm issuing an assurance report on the effectiveness of the operation financial system after completing the system. Advocacy threat is the threat that the professional accountant will promote a client's position to the point that the professional accountant's objectivity is compromised. For example, a firm promoting shares in an audit client. Familiarity threat is the threat that due to close relationship with client and making the professional accountant feel sympathetic to their interests. For example, professional accountant having a close family member being an employee of the clients. Intimidation threat is the threat that a professional accountant will be preventing from acting objectively because of actual pressures. For example, a firm being threatened with the dismissal from a client engagement. Safeguard is an action that may eliminate or reduce threat to an acceptable level. There are two categories. Firstly, safeguard created by profession, legislation, or regulation. For instance, educational, training, and experience requirement to enter profession, and also professional standard. As for the second one is safeguard in the work environment. So there are two types of safeguard in the work environment. Firstly, firm-wide safeguard, which leadership stresses on the importance of compliance with fundamental principles, and the last one is engagement-specific safeguard, which involving another firm to perform part of the engagement. Professional appointment. In section 210, there are 3 things we need to determine before accepting any client. First, client acceptance. Second, engagement acceptance. And lastly, changes in professional appointment.
Second opinion, situation where a professional accountant need to give second opinion on the application of accounting, auditing, reporting, or other standards or principles to specific circumstances or transactions by or on behalf of not existing client. A professional accountant need to evaluate any threat and apply safeguard to eliminate and reduce them until the acceptable level. Fees. professional accountant in public practice may quote whatever fee is deemed appropriate when negotiate regarding professional services. One professional accountant in public practice may quote lower price and it is not considered as unethical. However, they may be threat to compliance with fundamental principle if the quoted price is so low that it will be difficult to perform the engagement. Contingent fees are used for certain types of non-assurance engagement. However, it may create threats to compliance with fundamental principles. A professional accountant may receive a referral fee or commission relating to client. They may also pay a referral fee to obtain a client. The acceptance and the payment of such referral fee or commission may create a self-interest threat to objectivity and professional competence and due care. Professional accountant who seek new work using advertisement or other form of marketing may be threat to compliance with fundamental principles. A professional accountant in public practice should not make the profession in bad reputation. A public advertisement or an unsolicited request to submit a tender for professional services may cause threats to compliance with fundamental principles.
Section 260 Gifts and Hospitality. Client may propose gifts and hospitality to the public accountant, including close family. This could create risk to a compliance with the fundamental principles. However, existence of threats are depend on nature and intent of the offer. Professional accountants may conclude that their compliance with the fundamental principle is at acceptable level if the gifts and hospitality offered are known by third parties. Public accountants in public practice should not hold any assets or monies of the clients unless authorized by law. Therefore, when public accountants are entrusted for the asset, he should follow the following. When providing professional services, a professional accountant should determine whether any threat to compliance with fundamental principle of objectivity resulting from having interest or relationship with client or director or officers or employee. The objective of this section is to assist firms and members of audit teams in applying conceptual framework approach to achieve and maintain independence.
Part 2. Bylaw on Professional Conduct and Practice. Part B. Members in Public Practice. What is public practice? Public practice means accountancy firms that are operated by individuals in sole proprietorship or groups of individuals in partnership. There are three parts in Section 500, Method of Practice, which are method of practice, establishment and registration of member firm, and branches. Method of practice. Members are not allowed to use any other firm's name or invented names. Members also are not allowed to practice as chartered or licensed accountant except using their own names, names of their partners, and name of existing firm. They are not allowed to use name of the firm that may bring dishonor to the profession. They also cannot express their opinion on financial statements which examined by non-member and not allowing their names to be used. In addition, they may participate as a director or shareholder in limited or unlimited company which offers taxation services. Establishment and registration of member firm. The steps in registration of member firm are: members must apply for proposed name and MAC must satisfy with the name. In the application, members are required to register firm in writing relevant information such as name and address. They also need to inform any changes within 1 month and need to launch annual return to Institute every 31st January calendar year. Institute will issue a certificate of registration which contains of firm's registration number that must be displayed at the premise and need to submit to Institute upon dissolution or change of name. After that, firm need to insert the logo on top of letterhead either in full color or black and white, and also words, a firm registered with National Institute of Accountant. Last but not least, members required to put firm's number after or below the firm's name and other official letter. Branches. Members should not allow any branches of the member firm controlled under non-member. Section 510. Professional Indemnity Insurance. Members are required to maintain the policy. The policy needs to be obtained from licensed insurance company with minimum coverage of 100,000 ringgit. For those who have more than one firm, they need to require separate policies. For compound firm, one of the members must obtain the insurance under one single policy. Section 520. Death or incapacity of sole practitioner. If the firm continue in such condition, it will cause disadvantages to the clients. Thus, it is important for sole practitioner to protect their interests and client interests. However, arrangement can be made within 2 years from the date of commencement to be continued as a going concern until it recovers. Arrangement can be made through these two ways, which are enter into agreement with another sole practitioner or ensuring that their executors and family members are aware of such events. Section 540. Referrals. Referrals means that referring someone or something for consultation, review or further action. When member receive tasks by referral from another member, member should not provide any professional services. For member that accept referral from another member, they should not do anything that will disguise their position in continuing the work for client.
Created using Powtoon.